All right, you guys. So, welcome to Forward Focus. It is March 27th, and we are going to take a look at what is going on in the overall market right now. So, last week we were examining the larger two-wave move down in the NASDAQ and how momentum is starting to shift along the lows and the implications of what that means as far as how we react off of those lows. So here is the 60-minute time frame. I'm going to give us a little bit more data on here. But what we're looking at is the way that things kind of turned a little bit off of the lows. And basically what we consider this zone to be called is a widening up zone. So what we've seen is a 1, 2, 3 move down, which is basically just one strong leg down, a break partway, a second leg down, and then a shift. So it looks a lot like a leg. And you can see a smaller version right here, but the kneecap for the bigger version's over here. There we go. Now you can see it. So here's our first part of our leg, second part of our leg, which also has a two-wave move, and then even that part has a two-wave move. And then here's our shift. So we call this the boot or the foot. And what usually follows there is a widening up zone. What is tricky about the widening up zone is that it is not always the most predictable ahead of time for how that is going to unfold. Basically, the main thing that we know is that we'll start to get a lot more back and forth moves. So some ways that widening up zone can unfold are like this, where we will get, again, the boot. It can go up, it can go to slightly lower lows, it can go up again, it can go again to lows. So you can get that range starting to open up. That makes a lot of sense given the way the current market is right now. Another way that we can get it happening is like this. So sometimes you'll get a move and then it will start to shift and then it will gain steam. That is what we will see in something that is like more of a normal correction, and then it tries to make its way back up. There's often a lot of choppiness as it gets started, but then it starts to gain steam and head back up. It usually runs into trouble when it makes it about 76% of the way back up from that previous downside move. This one went a little bit more further than that, but that's usually a key point that we are watching for resistance when something manages to recover like that. This time around, I think that is going to be a lot more difficult. Of course, we have absolutely no idea exactly where this virus spread is going in the United States right now. Like the widening up zone following a leg like this, there's a lot of different scenarios that can play out. And as far as reading that goes, the closer term scenarios become the easier ones to follow. So when momentum is shifting within these moves where we have this widening up zone, we can get a lot of smaller time frame setups. That's the same thing that's going to happen now as COVID-19 spreads. We're going to have good pictures of what's going on in the short term in close areas, but we're not going to have as big of an idea of what's going to be happening in the longer term. There's a couple of scenarios as for how things are going to play out, and that is depicted in the charts of the market right now by the way that this has fallen and the type of move that we have seen so far coming off of the highs last month. So as you're looking at trade setups and you're looking at, hey, what should I be doing today? It's going to depend completely upon what is going on in those smaller time frames. So for example, here's a 5-minute chart of the NQ. And what you can see here is that we've got a megalanche. So we've got the move coming off of the highs. Here's kind of the foot, and it actually did the whiting that I was drawing there a second ago. And so that triggers a short setup. And here we have an avalanche, a little two wave. And here we're back to widening up again. So you've got your two wave move down, and then you're back at a widening up zone again. Here, if this goes and does a complete measured move down, you're going to have some support in here again. But you got to be paying attention to what's happening on those smaller time frames, because the larger time frames at this moment are not going to be as strong of a guide except for identifying some of the larger support and resistance levels. So for example, today we ran into the resistance right here. Well, I guess kind of yesterday. But when you're dealing with the leg down and then the widening up zone, the highs of that momentum shift are where we will typically see a good amount of resistance. And that's where we're at right now. And that's what we're seeing the reaction to right now. So these type of levels are going to work well as identifiers. Also, things like the Fibonacci retracement levels are going to be important ones to keep in mind too. So if we go up, there's two ways that we can put the Fibonacci retracement levels on here right now. The first is to go from the high to the low of the leg portion of this. And what we're seeing is that that created that stall there at the 23.6, but we can also look at it to the absolute low. And there we've got support at 23.6 and resistance at 38.2. Both of them are valid. So often what I do is that as this unfolds, I keep double checking to see which ones are holding the best. And that's the one that I will end up keeping on the charts. But I will always go back and double check and see if there's something kind of hidden from view that can give me an idea of a nearer term support or resistance level that I might not be watching. These are going to be the strongest, of course, when they are lining up with things like previous levels of highs or lows or congestion. So those are going to be some of the strongest ones to watch for. And they're going to apply to the smaller moves as well. So here, for example, you've got your bigger move to the upside. Then you've got a little bit of an extension to it. So first I would go from this low to this high and watch the levels on that one. Let me put that up on a smaller time frame. Oops, I double clicked too fast. I'll just add a new one. So that's going to be the first main one that I would look at. And as you can see, it's holding pretty good. We've got really nice support here with a 38.2, which is also a channel break over here, as well as pivot high and some congestion and lows. So really good level. The other one you can go for is this high. Now, in this case, I wouldn't typically use that high. Why? Because this did have a much larger correction here. So what I would be looking at is the possibility that this could play around a little bit at the high here on the 15-minute. And this is our main trend. So this is the one that I want to be paying the most attention to right now on the intraday charts. Let's go pull up some of these other indices here. So we've got the Russell. And as you can see, it took quite a nosedive. We were following this breakout last year, and one of the things that was noted was that it was struggling with momentum on the upside. So it really gave way to a strong drop when that channel broke. Let's look at this on a tighter time frame, the daily chart here. And we can use those same Fibonacci levels to look for resistance levels. Now on this one, there's a couple of two highs here. One is a little closer than the other. So I'm going to use the one to start with that's just the main drop, but you'll also want to look at the absolute one too. So kind of look at those both. They don't make too much of a difference here on the daily charts, but they will when you drop down to more of an intraday time frame. Put up a 60-minute. Again, you can see that boot, but it's not as defined as it was on the NQ. It's more of an inverse head and shoulders going on down here, and it's not as big either. So a little bit of a rounded low. This can potentially do a cup with handle, but there's not really a strong indication yet. What would be a big con for this as a cup with handle at this low? What do you guys see going on that would be a con for that? So the correct answer, as Nicole noted, was again, it didn't have a nice smooth trend to the upside. So it had the sharp move up and then these slightly higher highs. So basically what this does is it creates a move like this. And when a move like that happens, it's easier for downside movement to regain control. So you want to watch your trend moves when things are coming off of those lows. If you have something that is more of a trend like that and then goes into a base, it's easier for it to break higher. This can be a little bit more rounded. So this can start a little bit slower and then gain some speed. But the opposite here where it goes and then has that widening, that is not what we want to see. So a couple of ways this could have formed. Again, it could have done two waves up, then gone into a base, then given us a break. That would be a nice smooth cup with handle. It could have done three waves off of the lows, 1, 2, 3, and then gone into a base, unbroken. And they can even be shorter bases. So sometimes you will see a bigger 1, 2, 3 play out. So you might see 1, 2, 3 here, and then 1, 2, 3 here. That's the easiest when this is really not rounded. This is very, very small little shift in momentum when we look at the bigger time frame. We can see that better when I squish it up. Oops, I can't squish it up more here. But yeah, compared to this downside move, this is still very small. So hopefully that makes sense to you guys. So the main risk here again is that something could happen that would shift this momentum and allow it to drop back down again. And it could do it with a widening up more. So we might see it widen up more and then do that, but that risk is higher. All right, let's go look at the S&P next. See, I don't have an S. I closed my S&P charts on you. So we'll flip this one over. And the less clean, the more risk. Yep, that's a really good way of putting it. One example, I just kind of caught my eye while that is loading, is the move here off of the low on the NQ. Let me go down to see a little bit of a smaller time frame here. So see the NQ here? You've got that move down, you've got the widening up, but look how it comes off of that low. It has that two wave. So then when it goes into the two wave correction, this breakout has a stronger chance of success because it had that move where it corrected about halfway up and it didn't round at that high. So actually you can even look at this rounding at the high here as an example of how that momentum is shifting. So it's basically the opposite of what I just drew. So thank you, NQ, for giving us the perfect example of what I was just trying to show you. Granted, it's flipped over in the example here, but this is the perfect example here. And you can tell we're right at some resistance here. So we're going to get a little bit of a slowdown. Might be about 123.6% extension with the increase in momentum. Let's see if that was correct. Ooh, pretty close. I was off by a hair, but pretty darn close there. So here's the ES. You can see we've got the same thing going on. Also, you want to pay attention that when you have the leg and then you've got your foot, the smaller this boot is and the more pointed it is, the harder it is to get a full reversal. So the easier it becomes that things can widen up more. So let me see if I can show you an example of that. So you can get like a smaller one and then it will widen up. I mean, we don't really have that here, but if you got two legs down and you pretended this was the little foot, see how this then widened up like that? We're right about here in terms of what's going on in the overall market on that larger 240-minute, 60-minute chart. So this shows you one way that that can play out. Let me show you the comparison here again. So look at this, two waves down. It has a little bit of a shift. It doesn't do quite the foot here, but then it goes and widens up. So if we compare that to this, come on, chart, resize for me. There we go. What we're looking at is that this high right here could easily be the equivalent of this high right here. Do you guys see that? Keep in mind, this is the last portion, so it's actually this part here. Good. So this is one way that this can then play out here over the next couple of weeks. And I think there's a pretty good chance for it. Now, in the case of the intraday chart, it rounded off at the lows, but now you know what to look for when it comes off of that last low to determine if it's going to be able to put another wave up or if that has a better chance of going and breaking down again with more of like a megalanche type of move. And that is if this comes up here like this, and then you see the higher highs like that, then that can more easily turn so that this creates another leg down. So this is what I'm talking about when I'm discussing those subtle little differences at this point that are going to determine what happens next. And how about that? It held the resistance to the T. And right now we are at what we would call T2 for target 2 for a two-wave move. So this is usually where you'll get a support level. All right, let's go take a look at some of these other markets here. So you guys are interested in looking at oil. Oil's been what I've been trading. I would say like 80% of my trades lately have been in oil. A few scattered in gold and NQ. Don't get me wrong, there's lots of stock trades out there that are doing really well too. It's just I've been kind of lazy as far as scanning goes, so I've been sticking mostly to futures right now. Totally admit it. Just gonna grab a couple of charts of oil. And for those of you that were in last Wednesday's session, as I mentioned, my main bias on oil is still more on the bearish side. I do think it can go down to, well, it already went down to 20. That was the level that I gave then. And that zone hit already, but it's coming back in to try a retest. I'm just pulling these over from my trading computer. I don't have oil and gold on this one. Now check that out. Nice reaction, huh? NQ is holding these levels really well. The main thing that I find the most tricky about the NQ right now is not that we're not getting the patterns. The patterns are very well, as far as most of them are going. It's just that see all of this overlap from one bar to the next. A lot of the trends just aren't as smooth. So it makes it easier to get flushed out of positions. You have to keep some wider stops. But both of those levels we looked at, both here and here, held perfectly. So you guys have got to see some of that here playing out live. All right, I'm gonna go grab that. Got Karan running into class there. Wasn't he cute? Why is there more overlap? It has to do with the added volatility and uncertainty that's going on right now. You've got a lot of panic trades. So that is creating a lot more of that overlap as well. You've got people with delayed data. You've got orders that the market makers and brokers are all trying to place for their clients at different levels, where those clients are panicking or they're getting overly aggressive and like, bottom picking and things like that. So you've got a lot more of that activity there that is playing a role. So here's what we have on oil. We've got the breakdown, third even spacing on that. And this is a good zone for things to try to widen up a little bit because this drop here is a little tighter, but there's not quite a guarantee yet. So everything is still pointing more to the downside. You can see time development there is pretty similar to some of the previous corrections. So as you can see, we hit that 20 zone. Here's the intraday. So two-way correction was slower upside move. And this is an example of where it kind of rolled over. A lot of times this will actually gain steam on the downside. We are not seeing that yet here, but that is something that is very possible going into the afternoon. So our time development on a correction is pretty close to similar, especially if you go to here where it really started to go. And then you're looking at that comparison there. Right now on the smaller time frames, there is not much happening. There's actually a little bit of a attempt at a momentum reversal, but it's not holding well. So it is trying to turn back lower. I'm going to show you that on a 1 minute time frame. But I see nothing yet that would make me want to buy this as anything more than a day trade. So here again, we got three lows. It doesn't really hold, but it's not a full momentum reversal because the downside overall ended up picking up. So we had this shift here to create some lower lows. And then we had another one right in here, 1, 2, 3. A little bit of slower downside, but it popped a little bit better here. So this can flip again. It can turn back over again. We can even see this come up more again and then break down again. But overall, kind of messy here on the 1 minute. I'm not even seeing much worthwhile as like scalp plays at the second. So use some added caution here right now. But overall, again, my bias here is still more on the bearish side right now. Gold Gold has been doing some fun stuff lately, huh? So we've got, banks and companies offsetting positions, market calls, selling gold. That's a bit of a plummet a week or so ago, but we have made up those losses for the most part. I'm just grabbing those larger time frames for you guys. So on gold, what we're looking at is predominantly a trading range, but it has room for some higher highs. Overall, I've been pretty bullish on gold for quite a while here. And this hasn't really changed things. The larger time frames are still looking pretty good. I'm going to go over to our daily here first. So here's our daily. So as you can see, shift in momentum helps get this turned around. And then we had a little bit of that boot type of action there at the bottom. But the way that the momentum shifted within that allowed this to come back up. And we can see that when we look at the intraday charts. Because on the intraday time frame, that same idea that I was just telling you about, where it has the first solid move and then the second one is choppier, it allows it to flip back over. So since this is what we're starting to get at a high on the intraday charts in the indices, it makes it easier for it to be able to turn back to lows, just the same way that this allowed this to reverse and flip back up to highs. And it's done it very methodically. So when we look at this, it came up, did a good check mark pattern here with a phoenix, went into a really beautiful 1, 2, 3. It's tilted. And now we're up at the widening up zone. This is where boots can happen, feet can happen, or it can just go into, a bigger range. So again, the widening up zone can unfold many different ways, and it comes down to the nearer term momentum that determines how. So right now, for example, we've got a pretty good two-wave move into support here. So we're getting some reaction on the intraday charts on the smaller time frames right now. JNUG. Again, ES, basically the same thing. There's no real difference as far as how that is forming compared to some of the other markets right now. Same thing with the NQ. See that nice two-wave correction? We've spent the entire week looking at these two-wave corrections. And we have two pretty decent examples here. So you've got a good two-wave move within a bigger two-wave move. Now in this case, there's no smaller shift right here to help get you into that setup. There's just that channel break. There might have been something on a smaller time frame. I don't have a smaller time frame up. There's your little pause right there. And here's the little shift at the low. So you can see it a little bit on the 50 tick. So it shifts, it does that steep boot. That is a risk for reversal, but the trend placement is better. And then we get the turn. Sometimes you don't see something on a bigger time frame. You'll just see like the timing is there to give you a setup, but you don't see the setup. So here we have a little 2B. That is what took this and turned it around off that low. The pop, and then the two-wave move. So your entry is right here. And you could have done any number of continuation moves too. So here's your double tap. entry of that break. And here's another example of momentum shifting where then it goes and widens up. Nicole said it also turned right at 161.8. As far as time development goes, I assume is what she's referring to. We have been looking at time development as well. Let me put that up on here. So this is a perfect confirmation of everything we were talking about in class this week. Oops. Let's see here. I gotta go from the right level. There's your 161.8. And that's what we're looking for. All right, let's pull up some of those other markets for you guys. So JNUG, we've got Sprout. Give Sprout a second to pull up. What is going on there? SGM, I am looking at the wrong thing. That explains it. I'm like, this does not look right. That looks like a buyout at some point. All right, that looks more like it. All right, so we've got, our two-wave move down, widening up zone, and in this case, our widening up zone did not do the boot. It did a two-wave correction with a breakdown, but the breakdown is a lot more gradual than over here. So this area is kind of iffy. It pulled up really fast, which is good as far as the bulls go, because it means it's less likely to do something like a mega lanch and pull back lower again. But we need to see what's going on the smaller charts. Weekly doesn't offer a whole lot. Daily. So if this was a little bit more gradual like this, that would have opened up a bigger possibility that we could have gotten more of a megaphone forming here. But since this pulled up way too fast, it's harder for that to flip back around as easily. But the daily still doesn't really give us a good picture of what is coming. 240, we're getting a little bit clearer because we've got two-wave move up. Go down to 15-minute. Okay, so this 15-minute, the way this has unfolded, a lot of times when we have a really extreme move like this, and then the drop, the drop, the drop, this momentum shifting, we talked about this when we were looking at gaps a couple weeks ago. You guys remember? Those of you in League of Traders, we spent a couple weeks talking about gaps. So that shift in momentum there, if you treat this the same way you would a gap, it gives the buy setup here. And then this is our two-wave correction for the Phoenix. So you actually have an inverse head and shoulders here. Kind of ignore that extreme move there. Our breakout's a little bit slower, but this does have a propensity to gather steam again. So we often see this type of move where it will make it and go back up and go to a slightly higher high. So it's not perfect for that, but there's nothing here to negate that potential right now yet. It is true that this momentum is a little bit slower here than here, but when you look at the smaller moves within that, they're still holding up more for the upside. So we aren't seeing that shift happening on a smaller time frame. The bulls are still fully holding on to this. So intraday right now, this would be something I would be watching for buy setups personally. Yeah, our gold miners here got creamed. I really wouldn't know what to do with this at this level. Like, there's nothing here. It's that bigger, I mean, it almost went into a megaphone, but the drop was so harsh. We've got good smaller time frame setups on this, on like 5-minute time frames. You can see here, beautiful check mark. And look at how this unfolded right here. This is what I was just talking about. So you get the strong drop, flip, just like we were talking on sprouts, and then see how it kind of gets slower and then pulls up, and then we get here, we've got our check mark, and then it goes to the higher high. That's exactly what I was talking about can happen on sprouts. Exactly. Momentum might be a little bit different, but that's the pattern development for the way that these waves can unfold. And then we got a nice little reversal again down here. So we're at another widening up zone at this point. This could go and do another move to give a third move down. That is a possibility here because the support is really down here. So I think there's a good chance that it's going to make it back down to that level. Poor miners. SFM is sprouts. What did I say? I don't know when you posted that. Maybe that was earlier when I posted SGM. Douglas has a really good point here. So what he says is, thank you for your help with my trading, but I can't trade the short time frames like you. I lose money. I switched to the 15-minute, 60-minute, 120-day charts, and I do well. I went short big time for me the day before the top weeks ago and held until 5 days ago. Closed and went long and held until yesterday and then went short. That is awesome. So this is one thing that's really important about the type of market analysis I use. It applies to every single time frame. So for a lot of traders, you're not going to be focusing on scalp type of moves. You're going to be focusing on bigger time frames, even like a swing trade. I know a lot of you are options traders that are relying on those swing trade moves. And so you're looking for the same patterns, the exact same setups, but you're looking for it on the larger time frames. That means a lot more patience because the setups do not happen as common, as often, but they still happen. So when you see them developing like that 2T that we had on the weekly time frames in the overall market that Doug caught on the short side, then it's the exact same thing as we see happening on smaller time frame setups. Like you've got another version of it here on the 5-minute time frame. So it just depends upon, what your abilities are to follow the market. Do you have secondary jobs? Are you mostly looking at the market at night and then placing your orders, to go into the next day? There's tons and tons of ways that you can do it. So a lot of times I use smaller time frames because it gives me more examples too to show you guys, so you guys can learn the strategies easier. But they definitely apply to every single time frame, even like we've seen in Forward Focus on the weekly and the monthly time frames. What else do you guys want me to look at here today? This is TDOC. That's a good example of a phoenix here. Now, it's not based out really quite long enough to put in another wave up. This is something that there's a chance on the 5-minute time frame it could go and develop a 2T and flip it back over. Let's look at the larger time frames. So you got a little bit of a megaphone. There's a buy here. It's really messy. Let's see. Yeah, so right now this pulled back probably 61.8%. Let's see, maybe it looks like it's a little bit more than 50. Yeah, it's like halfway between. So by pulling back a little bit more than 50%, it makes that high a stronger resistance level again. And it can hold 50% even and still have that high as a strong resistance level again. So as we're coming up into that level, it's going to be hard to push through that to a higher high. If this can hold the base a little bit longer, we could get a third leg up, but the third leg up could have a higher probability of shifting momentum. So that's where that 2T potential could come into. What it would look like is basically something like that would be a possibility. It could still try to do a stronger move and then shift momentum, but this zone up here is going to be a really good resistance zone on this. And then it's more likely to come and pull back again, just like we saw on JUNG or JNUG, sorry. Natural gas. Okay, I don't have that loaded, so give me a second here. A little bit of a 2T there on oil just now, by the way, on a 15-second time frame. Way small time frame, but it's there. Okay, natural gas. Hold on a second. NG. Gonna let that load. And in the meantime, do you guys have any other questions? I'll show you that 2T on oil fast. While natural gas is loading. So this started to get some, kind of better moves. Here's again the 1, 2, 3 that I was talking about at the beginning of our session. So we had 2-wave up, kind of did a little bit of a shift here, 2-wave back down, a little bit of that shift. Here's a little 2-wave, and then here's the 2T with the double tap. So it's just really small, but that's where we're at right now. Okay, I've got a daily up for natural gas, so let me pull that up over here for you. And it is doing widening up too. It is having a hard time though, coming off of the low. So it's something that is either going to take longer to develop or could have some potentially lower lows. And I'm grabbing an intraday too because I want you to see the details on this. So what it's trying to do is a megaphone reversal off of the low. It's just not being able to get us the confirmation that we want to see on a momentum reversal. So here, or not a momentum reversal, a megaphone, sorry, a megaphone reversal. It's just not giving us the confirmation. So here's what we've got going on the daily time frame. You can see it starting to widen up and shift momentum here. But let's go look at the details on those. So as it's coming off the slowdown here, what you're seeing is here's our megaphone. Timing is great for buy setup down here. It hits the low pretty hard, so it goes and does a retest, tries to change that momentum. But look at where it's stalled. Ideally, where should it have gone to coming off of that low to give us better confirmation that it's going to give us a bigger reversal? Which one of you legal traders can answer that question? Going nowhere. Donna is our megaphone queen. Going nowhere. Should have gone hard up, right? So it only has this little two wave. Gets stuck there. Shifts momentum. Flips back down. So it's struggling. So ideally, what we would have seen is this would have pulled up to about here pretty well, preferably with like a little 1, 2, 3 up there. Maybe done a pause here and then got going. So in order for this to really get going again, it would now have to go into head and shoulder mode, inverse head and shoulder mode, and it's much more difficult. So when these do turn around and start going, they need another pattern to get them going. So it has a greater risk that this can go and flush to the downside again and break lower again. So you got to watch for that one. Instead of average trading range, simply I may put a ruler, control 3, on low high of my candle to the last 5 candle and give me a volatility for the past candle. That can help you, yes. Question, is the slow momentum on the downside now a negative or positive for flush? It is still potential because what happens here is that it has the possibility of creating a shallow avalanche. So if this channel goes there, that can flush again. So if you wanted to do some advanced trade management, if you're on the long side, that channel break right here is where you could adjust a stop and then wait for another setup to get in. That's what I would do. You are very welcome. How can I possibly identify opening range of the day? It's not something that I use any tool to really look at. I'm basically just eyeballing ranges. So for me, when I'm looking at, what an average trading range day is, I'm looking at the zones of where I've got kind of these smoother back and forth moves. So where there is more of a congesting trend, then that gives me kind of an eyeball as to what an average day's range is. So I don't get too specific or scientific about it. It's more of an artistic judgment, I guess you could say. All right, you guys. Well, thank you for joining me here today. And I hope you guys have a good rest of your day and a good weekend. I know it is crazy stressful out there right now. So, really just practice anything you can to find peace in your weekend. Get outside if you can, enjoy the sunlight, get some vitamin D, all of that good stuff stuff. I'm, with my cerebral spinal fluid leak, I spent so much time being trapped inside that, I'm kind of used to it now. But for a lot of people, they're going stir crazy. I know my husband is going absolutely insane right now. But just take it one day at a time, I mean, it's such a cliche for advice, but we'll get through it. And in the meantime, I find that distracting myself by doing something else, like learning something new, is a really great way to keep myself busy. So things, for example, for you guys would be going back and studying some of the older videos and just pulling out tips and ideas and concepts from those that you can watch and study. That's one way that you can do it. You can also go back and look at all of your previous trades. Go back through your trading journal, try to find patterns in your trades. That is another really good use for your time right now that you might have normally spent doing something else. So that's something that's going to have a direct impact on your trading and even your emotions as far as your trading goes. So I will see you guys back here next week, and I'll get this posted to YouTube for you guys. Had a little bit of trouble uploading last week. I don't know if it had something to do with the surge in internet connectivity or something, but it didn't load right away. I think it's up there now, but it took a while. So I will get this up. You guys can go and review it. I'll also post the replay link in the Telegram forum, and that'll usually be ready within a couple of hours. So if you guys want to shoot me a reminder or something, if you don't see it by then, I will grab it and post it there for you. All right, you guys, I am heading out. Gotta go do some home ed here. And I'm probably not going to do much for trading the rest of the day. On Friday afternoons, things have been kind of a little bit messier lately, but there'll be some setups out there if you want to stick around. All right, I'm out of here. Thank you for joining me. All right, so I missed Lorena's question. Like I said, I'm going to go and do that here really fast for her. All right, so we've got, basically, this is just going to go into a range. Let me grab your fibs. So you can see it's come up to that 50% level here. So these are going to be some retracement levels. Usually that 76.4, that's going to be the one where if this channel holds pretty strong on the way up, that's where you're going to get your reaction. There's a lot of other resistance there too with this and this. So I would look for it to have a shot of heading and continuing up to that level and then getting a little bit more of a correction, and then it could go back up. But overall, we're looking at a range on the daily chart. So there is that room for it to keep going, but look at what's happening on the smaller time frames for confirmation. Right now, still bullish. There's nothing to change that right now. We've got about the same amount of time development as over on the other side. So we've got some decent correction going on here. So I would still be bullish until there's something on a smaller scale that would shift that bias. So I hope that helps you out. Weekly can support it as well. Just given the way that it's reacted. Originally, I wouldn't have expected as much of a reaction here, but since it has pulled up to that 50% level, it's easier for it to keep going. This is more of a news type of move here, the way it's unfolded. Obviously, we have that news, but yes. All right, you guys, take two. I'm out of here. Bye.